We'll now take a look at exercise 12-5 on page 709. And here we're dealing with some trading securities. So far we've looked at held to maturity securities. And now we're going to move to trading securities. These would be investments held in an active trading account where the investor does not have significant influence over the financial policies and operating activities of the investee. And trading securities, they're held in an active trading account, and their investment is reported at fair value on the balance sheet. And then any gains or losses that we haven't realized yet, meaning we haven't sold the security and realized that gain or loss yet, those would still be reported in net income. So that's the exercise we're going to look at here. Alright. And then we'll look at how those items show up on the income statement and balance sheet as well. Okay, let's read through it. Ranzo-Lear Company buys and sells securities expecting to earn profits on short-term differences in price. And that kind of clues you into trading securities already. The company's fiscal year ends on December 31. The following selected transactions relating to Ranzo-Lear's trading account occurred during December 2016 and the first week of 2017. Okay, in 2016 on December 17th, so let's put in the year first. And this is December 17th. Okay, what happened? Purchased 100,000 Grocers Supply Corporation preferred shares for $350,000. So we're going to debit investment in Grocers Supply Corp shares, actually preferred shares, let me see if I can fix that a little bit. That's what I'll do. Investment in Grocer Supply Corp preferred shares. You can always continue the account title on the next row, just indent. We're going to put those on the books at cost. Originally here, $350,000, and then we're going to credit cash for the same amount. Okay. Then on December 28th, Ranzo-Lear received cash dividends of $2,000 from the Grocers Supply Corporation preferred shares. So on the 28th, we debit cash, the asset that increased, for $2,000. The account to credit is investment revenue for the same amount. And that takes care of the 28th. Right, then we go to the 31st. Recorded any necessary adjusting entry relating to the Grocers Supply Corporation preferred shares. The market price of the stock was $4 per share. So on trading securities, you guys, just remember we're going to mark those to their fair value on the balance sheet, and then any unrealized holding gains or losses, we'll go ahead and include those in net income. So let's look at the entry to get that on the books. So first off, we want to determine if we had a gain or a loss. Well, we got 100,000 shares. The market price is $4 per share. So the market price is 400,000. Our cost was 300,000. So we have an unrealized gain. The fair value of the shares has increased since December 17. So we're going to debit an account called fair value adjustment for the amount of the unrealized gain. Well, that's going to be equal to the number of shares was 100,000 shares. We've looked at this already. Times $4 per share. Minus what we paid for them, $350,000. So you get a $50,000 fair value adjustment. This account balance will be added to the investment in the Grocers Supply Corp preferred shares cost amount on the balance sheet. So they'll end up being, these shares will end up being reported at $400,000, their fair value. The account to credit is net unrealized holding gains and losses dash income statement. That means that this gain or loss, in this case a gain, is going to show up on the income statement as a part of net income rather than as a part of other comprehensive income. Notice the fair value adjustment's a debit. It's going to increase the debit balance of the investment account. And the unrealized holding gains or losses account, it's a credit here, so that means it's an unrealized gain. Had this account been debited, had we had a $50,000 unrealized loss, these two accounts would be flipped around. Right, we'd debit net unrealized holding gains and losses dash income statement, and we'd actually have a $50,000 loss, and we'd credit the fair value adjustment, which would decrease the investment in Grocers Supply Corp preferred shares balance. So it's $50,000 here as well, and that takes care of the entry on the 31st. Okay, so let's move along to 2017. On January 5th, sold the Grocers Supply Corp preferred shares for $395,000. So the cash account increased that day by $395,000. We're going to credit investment in Grocers Supply Corp preferred shares for $350,000. That takes the investment off the books. Okay, so now we have what? We should have indented this one as well, since it's going to be credited. Okay. So here we have, we need more credit to balance the entry. We have a gain on sale of investments with a difference $45,000. Now when we get to the end of 2017, this unrealized gain from the previous year has now been realized. It was actually $45,000. We expected it to be $50,000 at the end of the previous year. So when we get to the end of December 2017, we need to remove, this is assuming there were no other unrealized holding gains or losses on trading securities during the year. We need to remove this entry from the books because the gain is no longer unrealized. The stock was sold on January 5th, and we realized that $45,000 gain. So to take this entry off the books, we just reverse what we did at the end of the previous year. So we're going to debit net unrealized holding gains or losses on the income statement for $50,000, and then we're going to credit fair value adjustment for $50,000. That takes the effect of last year's entry off the books. Alright, now that's all a part of instruction 1. Instruction 2 asks, indicate any amounts that Renzo Lear Company would report in its 2016 balance sheet and income statement as a result of this investment. So on December 31, 2016, what would we show on the balance sheet and in the income statement? Well, on the balance sheet, we'd show our investment in Grocers Supply Corp preferred shares at its fair value, $350,000 plus the $50,000 fair value adjustment. And you see that here on the balance sheet under trading securities. We would show those at $400,000, and that $400,000 is equal to our $350 plus the $50,000 unrealized gain. On the income statement, we'd show investment revenue, which were our dividends from the previous page, received on December 28, $2,000. So our dividends would show up as income on the income statement. And we would also include on the income statement our net unrealized holding gains or losses from that adjusting entry, because these were trading securities. So that $50,000 is actually included in 2016's net income. Now in 2017, when we sell those trading securities, the actual gain, $45,000, would be included in 2017 net income, but we'd have to back out the unrealized gain of $50,000 from the previous year. So they say, please note, unlike for securities available for sale or held to maturity securities, unrealized holding gains and losses for trading securities are included in, I'd like to make that net income. And let's like those cells merged together. Okay, so far you've seen held to maturity investments and trading securities. I don't think you'll have any problem with the exercise 12.5 on the Connect Plus site. If you do, please be in touch. Thank you.